Hey folks, this is Ryan Mallory for SharePlanner.com. Today is January 22nd, 2013, doing another session of LiveCharts. And like I always do, I'm going to go over the broader market action, give you some thoughts and opinions on what we're seeing there. And then I'm going to go over some requests from the splash zone here of charts that folks want me to go over, and let you know my thoughts from long-term perspectives, if that's what the request was, or just trade setups in general. Um, just starting off first though with the S&P, and I try to keep these under 15 minutes too. By the way, we have the bull flag breakout that happened back in early January. We've been progressing nicely out of that. You can see though that this channel probably could be a little bit tighter there. There we go. You can see that we are right up against this upper channel here, so there's not a lot of room to really make a run unless we consolidate for a few days, and then that'll alleviate a little bit of that pressure. But the market's on a crazy tear. I mean, you just look during the month of January alone. We have only had 1, 2, 3, 4, 5 days in the red. I wouldn't even count this a red day because we finished basically break even. It just painted a red candle on that particular day, but only 5 down days versus 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're going up about almost 66% of the time versus being down. And prior today was only 4 days. So if you look at prior to today, we're down 4 days, up 9 days. That is a insane stat. It's about 70% higher throughout this month, which isn't something that you sustain. I'm getting very nervous about this market from the sense that I don't think it is sustainable. I think that we are in desperate need for a pullback, and I think we're probably going to get one here sooner rather than later. You have this huge gap right here that needs to be filled. You have a huge gap here. Not, I wouldn't say huge, but it is a gap that needs to be filled. And you got this gap off the November lows that, boy, you'd really like to think that we won't be testing that anytime soon, but goodness, it's very easy to see where we could be testing that low. So not anytime in the next month or so, but I could see over like a multi-month pullback or something like that if we were to get one of those where this gap here would probably get filled. But neither the here nor now. We're a long ways from that happening, but lots of gaps to fill. You got another gap right here that has to be filled. So I am quite uneasy about this market. We took some gains in positions today. I'm not hesitating right now to take positions in long plays simply because I don't want to be caught with my pants down if this market does reverse. One of the things I may end up considering doing today is actually adding another short position to the portfolio. So we have 3 longs right now and 2 shorts. That would actually bring us, or I'm sorry, 3 longs and 1 short. By adding another position, that would give us 3 longs, 2 shorts, and give me enough flexibility to where if we're not getting a pullback, and TEVA has been acting like a champ for us lately as a short position, but if we don't get that pullback, I could either sell one of the short positions and be long 3 and then 1, or sell one and add a long position and be, or I'm sorry, cover a short, add a long position, then I'd be long 4 positions, short 1 position, and have a fairly bullish edge. But right now I'm getting a little bit queasy and probably going to be looking at opportunities to hedge my exposure to the long side. So so those are my market thoughts there. One thing that's very consistent about this market is the raging dip buying that's going on right now. Every day you see it. Every day. If I pull up the 5-minute chart, it is incredibly obvious where it's occurring at. Today, it happens at 10:30, right after we make lows on the morning. We go on a buying stampede. We did it again at around 12 back on Friday, and I mean that was that was a crazy tear. I mean, you go from 1475 all the way up to 1485 in the afternoon, so that was a 10-point move. Outside of Thursday, I mean, every day has been dip buying right here, right there, going on the 16th and the 15th. So be cognizant of that. Eventually, the dip buyers do get burned mightily for doing that. Let's look at some of the positions in the portfolio. BG. I've got a target of over $80 on this stock, but it's done great since it broke out here around 74-ish. And I think we got in around 75, so we're up a couple bucks on this trade. And you know, I'm still looking forward to continue its move higher. If you put the Bollinger Bands on there, you can see it has no problem, A, of bucking the trend, and B, of running rampant outside of the Bollinger Bands. So right now it's somewhat outside of it. We had a pullback Friday that relieved it of some, but it doesn't worry me too much. We're up 1, 2, 3, 4, 5, 6, 7, 8 out of the last 9 trading sessions, which is, for most stocks, that's extreme. BG, it runs sometimes 14 and 15 days without even as much as a pullback. So what I'm gonna continue to do with BG is increase my stop loss. Right now I have it at 76.43, which after today I could probably justify. I probably need to pull up a 30-minute chart to get a maybe up to $77 or so. I'm not quite sure on that. I may not even adjust it at all after today's price action because it was pretty tight going into my adjustment from this morning. LO, the double bottom, it's still pushing higher here. Not sitting on a ton of gains on this particular trade. 39.63 is where it currently stands. We got in at 39.16, so not a lot to lose if it goes against us, but the stock looks still pretty good, though. I mean, it's definitely in a breakout. And then RDS, this is our buy on Friday, breaking out of this long-term inverse head and shoulders pattern here, and hasn't done much yet, but we'll see what the day still holds for it. I don't expect this one to be a huge mover in terms of making, like, you know, 3% a day, 4% a day, or anything. I think this one is more going to be like a 2 steps forward, 1 step back. You know, 1% higher one day, 0.5% lower the next, and just a consistent, you know, push higher. So, big company. I would say that this stock could easily morph into like a month-long position. And then the short position that I have, TEVA. On TEVA, this one, it's bouncing back a little bit today. We started off going lower, but it has definitely found a little bit of a bid early on. Not anything that I'm really concerned with at this point. I think the action, excluding today, but from the 3 days prior, was very bearish. You have a evening star bearish formation, which tends to forecast a move lower in the days ahead. So I could be tempted to take gains once it gets down to like 36.80s or so. I don't like to let my shorts run, you know, for a long time before I eventually take my gains in that trade. So, all right, on to some other trades that were asked about. IOC. Probably the best thing this thing has going right now for it is this trend line off of the December lows. So ideally, if you were to buy it, you'd want to buy it, you know, somewhere around 58.23 or so, 58.25. So pull back to this trend line here. If it doesn't pull back to that, I don't think there is a reason to buy it. So I don't see any like breakout patterns. So this definitely falls into the buy on the pullback, not on the breakout type of trade. You gotta be careful too. Even if you buy it off of that pullback, you can get even a short-term bounce off of it, that you don't hold it too long, because what is forming in this thing is a longer-term bear flag pattern. So, and I'm glad I noticed that, because I didn't at first. To me, if you look at the longer term perspective, and maybe it means looking at the weekly, if you look at that weekly, that is definitely a bear flag pattern. So a break below that $58.20 dollar price level, that would probably be a good reason to get short on it. So I'm going to consider IOC not a stock you want to buy on the pullback, although there could be a play there. I would say based on the fact that it really didn't make a significant higher high on this trend line here, that the stock is weakening, and it'll probably be a better candidate as a short than as a long. Netflix, goodness, this is one stock that has probably given me more frustrations in the past years than any other stock. I mean, I've made good money off of trading it long, but I've done it everything from options to equities, and this thing can just royally tick you off like no other stock can. So I'd say there's probably a lot of support here at that 95.50 level, which is about $1.60 away right now. So if it breaks below that, I would say that there is a good chance this thing is going lower in the short term. So I definitely say that would be a bearish, let me draw that line a little bit better here, a bearish setup for this stock. So below 95.60, that's where you want to, I'm sorry, below 95.50, that's where you want to get short at on this stock. Hard thing with Netflix is always finding an ideal stop loss, so I would probably just put it above today's price action, which would be about 90. I don't know, I'd probably just say go ahead and put it at like $100.10 stop loss. Not bad at all though, and one I'm going to add Netflix and IOC to my short watch lists. Let's check out FCX. This is more from a long-term perspective. You have a huge gap that still needs to be filled on this to the upside. That's a positive development. You can see in the past here, like when we got the other gap, that it did fill here. It filled here back in late October as well, this little small gap. So sometimes it's very precise in the gap fill, so it would lead me to believe that this 38.25 price level will be eventually reached in FCX. Ideally, you'd like for it to break that 50-day moving average first. The 200 doesn't scare me much. Yeah, I wouldn't say there's much value to the 200-day moving average in this particular stock. But once it does break above that 50-day moving average, it'll also be breaking out above previous price highs. So 35.65 is probably where you'd want to get long at. The only issue with it is already made a 5% run today, and you'd have to go flip over to like the 30-minute chart to find where you want to put your stop losses. The only problem with putting out a stop loss is that on the 30-minute chart is it's not going to be as strong, so you could definitely see the thing push through that stop and then pop right back higher again. So I like FCX from the price action standpoint. I'm just not sure about it from a good stop loss. So if you find a stop loss that you're comfortable with and there's some price support just above it, then that would make it a good trade. I'm still going to add that to my long watch list. I think it sets up nicely. So we're like 3 for 3 in good charts so far. SNI. You got a double bottom here on the chart. I'd say above $60 you could get long on this one and put that stop below 58.27. They give you about 3% to work with. Not the cleanest of charts, but there's definitely a clear edge there. At 60 it would be breaking out above previous price action, so I'll add that to my list as well. 4 for 4. Let's look at HTZ. HTZ trending higher. I would want to buy on the pullback, maybe to around 17.15 before taking gains in it. And I'll show you exactly what I mean here. You got a very nice channel here that it is trading in. Let's fix that up a little. There we go. All right, it's in the middle of the channel. There's no reason to buy now, even though it might look like it's breaking out. I would wait for it instead to, pull back if it can to like 17.15, 17.17. Go along there. If it breaks below this channel, that's where you put your stop at. This has been a very good trending stock, so buy on the pullback. Don't buy on the breakout because you're not likely to have as much upside to it at that point. Visa. This is on our stocks that only go up list that I screen for on a monthly basis. V, just a unbelievable trend line that it's been trading in for well over a year now. You pull up the weekly chart and it just looks better. Another stock you're not going to want to buy on a breakout, and simply because you're limiting your opportunity to profit off of the trade when you do so. It pulls back, so wait for this thing to pull back again. It is a mature trending stock, so the possibilities of this trend ending is definitely increases on this kind of a mature trend line. But nonetheless, I mean, it's worked well over 15 times on this current trend line that when you buy the dip, it pops back up higher. So if you can get in around 153 or so, 154, that's where I would target for a play. If it breaks below this trend line, you're not going to stand to lose much because you bought right off of it. So you can keep your stop losses tight, and as long as this trend line doesn't break, you can just keep adjusting your stop loss each day to fit right underneath this trend line that continues to rise. ALK, way overextended. No significant opportunity there. I would hold off of trading that one. JASO, not bad. You got like a box breakout, a very short-term box breakout. Sometimes they're not as reliable as when the consolidation happens over a longer period of time. This is also a small dollar stock, so you have to be cognizant of that as well. I would say 5. Yeah, I'd say 563. Basically, where it's trading at right now is where it would be breaking out. You have a lot of support at this 10-day moving average, so maybe stop like a few cents below it if you can handle that big of a stop loss. I personally can't. I would have to take a half position or maybe even a third of a position to accommodate that kind of a stop loss. So I will pass on it for me personally, but if you can handle that kind of a big swing, this is a $5 stock, so sometimes wider stop losses are appropriate in that situation, but you just have to understand the risks that come along with it. Big gain opportunities are often accompanied with big loss opportunities. HOV. And so just going back here real quick too, I'm going to add Visa and JASO to my watch lists too, because even though I don't think I'll get into JASO, it's still one worth watching for a possible setup. You never know, the risk might become more favorable. All right, already on HOV here. Stock that you buy in the pullback, which is what it's currently doing as we speak. You can see a very good trend line up until 2 days ago, so or 2 trading days ago. So it's threatening to break it. I would be very careful about getting long here because it has never even so much as traded intraday below this trend line, and now you got 2 days worth of where it is doing that, and we're on the 3rd day today, and it's still doing the same. So this stock looks like it could be faltering some, and as a result of that, I would be very careful about getting into a long position. If you are going to get into a long position, geez, I'm not even going to talk about it just because I think it's very a high risk proposition in doing so. All right, that's going to do it. I went a little bit over today, but if you guys have any questions, comments, feel free to hit me up in the splash zone. That's where I'm at all day while I'm trading, providing my alerts real time. You can also shoot me an email at ryan@shareplanner.com. I give first priority to the people in the splash zone on the charts. If we have time, I'll sometimes jump into some of the charts from those non-members, but nonetheless, God bless you all throughout this week. I'm glad that we're back up and trading after a holiday break yesterday. Take care.